You're ready to buy a home or you own a home and you think you should look into refinancing, maybe again, no problem, right? You call your bank that you have your bank accounts with, let them know you're reaching out to get pre-approved. You need a pre-approval letter later today because you want to make that offer, only to find out they don't issue pre-approval letters or they don't have an FHA loan, which is what you were interested in. Shopping for a mortgage can be very frustrating and confusing. I'm Megan Marsh, one of the founders of Keystone Alliance Mortgage, a mortgage brokerage and a commercial and residential loan officer. Make sure you hit that subscribe button and the bell so that you get notifications when we release a video each week that could help you grow your business, your real estate portfolio, or just buy a home. None of us ever want to find ourselves in a situation where we feel completely lost or helpless at a disadvantage for something that we need to do, but we just don't understand it. And unfortunately, we see this happen a lot when it comes to home buyers or homeowners who need to get financing for a home. And so shopping for financial products is really confusing because we've never been taught how to do this. And so that's why today we wanted to share with you the 5 types of lenders that you can turn to when you're ready to get a home loan and explain the pros and cons of each one so you can understand how each one can help you. So the first one is the one you're going to know the most about or be familiar with. It's depository banks. And these are your local banks, your credit unions. You know, it's the bank that you walk into and you deposit your paychecks. They want all of your money. And because of that, they offer a really wide range of products. Things like money market accounts, CDs, checking and savings, home equity lines of credit. And they do offer some mortgage options as well. But it's also why most people go in thinking they're going to have what they need, and it doesn't always happen. They're really great, these depository banks, when you need a car loan or that home equity line. But they're not my favorite option for getting a mortgage. And that's because they are much more limited with the products they have for buyers. And I see many people actually walk in and walk away discouraged or disappointed when they're told that they need a higher credit score or they need a lot more money than they actually do with the better options that are out there for them. You know, and the reason that the banks don't have as many mortgage products is that they don't necessarily want the risk and they're regulated differently than other lending institutions. But they do have benefits, and it's that they sometimes do have some lower closing costs than bigger lenders. When I say lower costs, we're talking $100 to a few $100 just on one fee that's on the cost sheet of buying a home. And this is just a fraction of the things that you pay for when you're getting a mortgage. One of the other things I noticed with the depository banks is that they don't always want you to refinance because they're holding the mortgage and the interest rate. Now, these depository banks, they do a little bit of everything, but they're not specialists in anything. And that's why the next categories are the ones that I think you should most use when you're looking to get financing for a home. So the number 2 lending institution is your mortgage bank. And these are your bread and butter. Their bread and butter is mortgages. They'll have more products than the depository banks, and they're very large companies. These mortgage banks seem to have what's called overlays, though, that other lending institutions or another one we're going to go through doesn't have. And let me explain for a quick second what an overlay means. And that means that banks determine things they won't do. And a great example is that FHA loans, if you've ever heard of them, they don't have a minimum credit score. FHA will do a loan for anyone who can get an approval in this system that we use. But a borrower could be told by a mortgage bank that they can't get a loan because their score is a 615 and FHA can only be financed with over a 620. That is an overlay. It's that bank saying we won't do anything over or under a 620. That's an overlay. I also find that many of these mortgage banks, they also don't like to do different things like manufactured homes or renovation loans. And those examples like the credit score under the 620. So they do have restrictions still, but they have a lot more than your depository banks. Here's a few examples of names you may have heard of. So Loan Depot, Rocket Mortgage, Veterans United. These are some of these banks that just do mortgages, and you're gonna see them all over the place. Their closing costs, I've noticed, are definitely higher than your depository banks. Their rates are also a little bit higher, and that's for a couple of reasons. And the first one is that they do not have to offer lower interest rates. And so they're allowed to charge more through the rate. And they have a very large operations staff and salespeople to support. So I find you're usually going to see a rate that's around 0.25% higher than at your depository banks, and definitely more than your brokers. Now, I do want to say that even though the rates aren't the lowest you're going to find, they usually are fair. But I don't know if I've ever seen a time that a mortgage bank is offering a lower rate and lower cost than what a mortgage broker, for example, is offering. Some of the benefits of mortgage banks is that they fund their own loans. And when they fund their own loans, they then can sell them. They could keep them and service them. The decision's really up to them, which gives them, in their opinion, control. And many of these banks actually purchase mortgages from smaller lenders, such as the next category we're jumping into, number 3, direct lenders, also known as correspondents. So these lenders are many times mortgage brokers who decide to get a line of credit and start lending their own money. So why would a mortgage broker want to do this, or why would somebody want to be a direct lender? And it comes down to 2 things: control and money. Direct lenders make a lot more money on loans than you can as a broker. Direct lenders get the benefit of being able to control parts of the process as well, because they can have their own in-house underwriters and closers. And funding loans with their own money through a line of credit, it allows them then to have control of when a loan closes, because when they fund their own money, they just have to sell it after closing to investors. These direct lenders are smaller than your mortgage banks in the previous section. And I find that their disadvantages are very similar to mortgage banks. They seem to have overlays because they're now taking on a lot of risk, and they need to make sure that the mortgages that they're funding get purchased after closing. So I see a lot of these correspondents, and I see them adding these overlays I discussed in the previous examples. And that's why my favorite category of lenders is the mortgage broker section. And mortgage brokers are different than the first 3, mainly because they're not lending their own money. They're a middleman, and they connect borrowers with lenders. They bring them together. And so I believe brokers are best for anyone buying a home, because they go out, these mortgage brokers go out and they shop with direct lenders, depository banks, mortgage banks, and they find out which one has exactly what you need as a homeowner or a home buyer. And some of these examples could be, if you have great credit, you go to a broker, they're going to go look for a lender that has the best rates and the best costs. If you go to a broker and you have poor credit, they look for the bank that will lend where your score is. If you're buying a manufactured home, they'll run through their list of 10 to 20 lenders, and they're going to locate the bank who will finance that specific type of home. If you're self-employed or a real estate investor, they can find private lenders and help with portfolio loans if you don't fit in the box of a traditional loan. And I could keep giving you examples of how a broker helps close more deals in the market because of their ability to compile a list of specialty lenders for clients and real estate partners that need them. But just imagine if you had to go and walk into banks to figure out who did manufactured homes, low scores, it would take you forever. Brokers do that work for you. A few things that brokers don't do is that they don't fund their own loans with their own money, which has many in the direct lending world say, brokers don't have control and can't control the loan process. But, I'd like to say that simply isn't true. In 2021, brokers and their wholesale bank partners have found ways to operate together, close loans quickly, and service customers' needs in a very efficient and flexible way. Brokers don't service their loans because at closing, when you get a loan through a broker, your loan's going to be funded by one of the above lenders. And a broker can place you with someone who will sell your loan, or they could place you with someone who's going to service the loan and keep it. So if that's important to you, make sure you talk to your loan officer about this if you're going to go through a broker. Now, I do like to mention that not all brokers are the same. So brokers can sign up with any lender that they choose. I find that mortgage broker's strength lies in the depth of their lender mix. Our office, for example, has closed a number of loans that were turned away by other brokers. And that's because those brokers didn't have the same banks and lenders that we have chosen to have, or they sometimes don't have the experience in their office to know what's available in the market. So another benefit of brokers is that they can't make as much money as the lenders discussed before. So it's not a benefit to them, but it's a benefit to you as a borrower. Because brokers are capped at what they can collect, this also caps the rate. So in return, you get lower rates as a borrower, and you also get lower closing costs. You can actually choose at a broker to take the rate that they can offer you, the market rate, it's gonna be a lower rate, or you can choose to take a higher rate, maybe where the banks and depository banks and mortgage banks are at. You could take that rate, but with a broker, you get a lender credit that can add up to thousands of dollars. This is a great tip and tool to use if you're in a market where you can't ask for seller's assistance because there's multiple offers. And then the last category of lenders I just wanted to mention is commercial lenders. And although commercial is a totally different category, I wanted to mention them in this video because I didn't understand the role of commercial lenders 15 years ago like I do today. I always thought you needed to go into your depository bank to get a commercial loan for an investment property or a business, but it's just not true. There are actually independent lenders in the commercial market that also have multiple categories like the ones I just talked about. And if you go through a commercial brokerage, they can do the same thing that they can do for a residential loan. So if you'd like to understand more about mortgage loans, commercial loans, and the different types of lenders, we do have other videos on this channel that you can check out, and we have linked a few of them in the description. We hope that this video gave you the insight that you're looking for and that you'll join us for more information on next week's video. If you know somebody who could benefit from this information, please feel free to share this video. Hit that subscribe button and the bell to get further notifications. And if I didn't answer one of your questions, we'd love to see your feedback in the comments below. Otherwise, continue to check out all our other home buying and home owning tips in our channel and tune in for next week's video. Oh, and if you are ready to apply or meet with a loan officer on our team, click the link in the description below.